Welcome. How are you? Yes, it's the Market Sniper. We're back. We're in the maroon for you today, and we're going to be talking to you about the great inflation. The great inflation, and there's a certain sense that there's been a bit of an inflection point in the global macro markets as they are moving right now. And a number of us have been commenting on that. We've actually called a top on the bonds some time ago. In fact, we believe that came way back a year ago today, round about now when the whole COVID was going down and you had the super spike after a dip. And we'll go to that chart. So what are we going to cover today? Well, we're going to cover a couple of thoughts from my newsletter with regards to inflation and the inflation trade. We're going to have a look at a thread that Raoul kindly did, sharing some of his thoughts. A very interesting one, worth a follow if you're not following him on Twitter. Him of Real Vision. So we'll go through some of the charts and the thoughts that's generated by that. There is a large, big game of debasement occurring that is accelerating. To understand that game means you have a slugger's chance of actually coming out of this better. The bulk of the people do not. The bulk of the people are earning salaries in jobs, and their wages are getting whittled away in true buying power. Just even with getting mild increases, an annual review of 2 or 3% a year, they are going hopelessly backwards. Remember that 24% of all dollars ever created were created last year in 2020. And just imagine what it'll be at the end of this year. Not including Biden's 1.9 trillion going out, what's already gone out, etc., and what will still come and all that happens. So there's a huge debasement on so many different levels. Plus, we've got to look at all the places you can hide and where you're going to get the best performance. Some have underperformed slightly, even though they have done some good for you. They haven't done enough relative to the total global central banking proliferation. In other words, you take all the global banks of the law, or certainly the majors at least, of the world, and you look at how much fiat have they created and proliferated in total, and how's certain asset classes done relative to that. One of those actually is gold, which is, while it has saved you some value, hasn't done enough. It's actually underperformed in saving you value, so we will talk about that. By the way, other things have overperformed. We'll talk about them too when we go and have a little look at it. But let's just understand inflation a little bit better as well. I want to just talk to you about what inflation in essence actually means for us and how you should look at it. In our newsletter, which we are addressing on that, by the way, if you are subscribed for our mini series, you're automatically included in our newsletter once a month, totally free. There's no charge. Couple of thoughts, couple of charts. We're not some highfalutin fluffy. We tell you what we're thinking at that given point in time and what's the most interesting chart at that particular time. But in this kind of environment, I felt the need to actually put a couple of points down that you'll see here on our screen. And one of the key things points I'm referring to is that in our personal logo for our business, we talk about the full reset. We talk about the crypto realm, and we talk about the market sniper. So it's the market sniper, the crypto sniper, and the reset sniper. Because we're looking at traditional markets utilizing HVF method, the hunt volatility funnel method, and we're looking at oil, FX, etc., indices, and the tech stoinks. Then we're looking at the crypto market specifically as this new role player that is currently an outperformer in protecting your money. Yes. And then we're also looking at the reset sniper, which is the big circle that is saying, listen, they're pulling the whole tent down on us. This is more than just economic, it's social, it's political, it's power, it's control, it's totalitarianism. And thereby, where are they taking us by plan? By virtue of where they want to go. And that looks at certain things. And that, to many, has a conspiratorial element that most people can't stomach. Broadly, you're not going to find someone like Raoul maybe addressing that particularly very much. He's going to look at it more from a financial, from a ex-Goldman Sachs employee type approach. So we're trying to pull all those together, and you're sitting in that apex, that overlap, those three overlapping circles. The sweet spot is there. That's the sniper sight. That's what you get here from us. So a couple of key things about this. when you do macro technical analysis, you can see who's overperforming, who's underperforming relatively. And we plan to share some of that with you. Now, we created an anti-fiat category. That can be a number of things. It's not just Bitcoin, ergo the other cryptos as well, and gold and silver. It can also be made up of equities, say, for example, high performance tech, life sciences, biotech, or the big FANG megacorp monopolies that are prostituting all your data out, gathering and selling you everything from Google, Schmoogle, Apple, Amazon, etc. So all of these are possible areas where you might retain some value. And in some cases, they've performed, although now they've slowed and they're not anymore. So how you play this game is how you position for which ones are currently performing and preserving values and which ones are looking a bit tired after doing so for a while, for which you might occasionally, without being day traders, make 1 or 2, maybe 3 decisions a year to position yourself specifically well for the current cycle that you're in. For example, the last 6 months, we noticed energy, a lot of energy stocks in upside HVFs. Energy has ran really, really well. Energy stocks and, of course, oil in its great recovery from its major spill low. So that's an example. But let's go back to that anti-fiat category and just talk about a couple of things. Agricultural land, for example, certain equity groups, all of these could be points of protection, and you may need them all at different times. So buying a property might be pertinent. It might not be pertinent now. It might be pertinent a bit later, etc. But the simple thesis is quantitative easing or stimulus and monetary policy rate suppression policies is inflation. Inflation isn't just that point when your loaf of bread at your local supermarket goes up. That's a long-term knock-on effect that can be disguised for a while before you notice it. The minute they proliferate, that is inflationary. And what tends to happen is excessive amounts of that will lead to double-digit inflation, sometimes referred to as hyperinflation. Certainly deep in the double and going into the triples is hyperinflation, but even getting into double digits is starting to be rather high inflation. So what we're saying is, since the quantitative easing that's gone on in 2008, many people will say, well, where's your inflation? Because the Fed's measure will tell you 1.4% in inflation. It'll do so despite the stock market going up 280%, despite oil rebounding immensely recently by the tune of, over 100, 200% in the last year. But despite coffee going up, despite all these things, you always just end up with just 1.4% inflation rate. Well, there's lies, damn lies, and statistics. And who controls the number that comes out is the Office of National Statistics, the ONS, and they are always adjusting the basket regularly for what items they wish to include. Plus, retailers apply tactics like shrinkflation. So you have a 375 gram coffee, and the next month they have one in a very similar shaped size, but it's a 337 gram, for example, for the same price, or for a minor increase, and you're actually getting less for a tad more. So cost per unit is actually being passed on. You need a little bit more of those each time, or 20% more to see your month through. So those are the techniques. Shrinkflation, the major Procter & Gamble's and the major supermarkets are all in this. There's an entire Reddit thread dedicated to shrinkflation, where you can see everything from fabric software, you name it, all very similar sizing, but just slightly smaller. It's kind of like a Mandela effect that they're playing on you. Look into my eyes, look into my eyes. Oh, no, it's slightly smaller, slightly less, slightly everything. And they're continually perpetuating new packaging for this purposes. So they don't change something unless there's a benefit in there for them, the great retailers. So what have we had? The one thing that does hide inflation is, in fact, the concept that when we have a major scare or a reduction in growth in the global world economies, money is either written off, which is destroyed, which is counteracts the inflationary, if that happens. And where money is not written off but restructured and continued, they're keeping a toxic zombie going, and they're pumping, they're then pumping new money in later down. When you get that deflationary, it's because the growth, the amount you're spending, is getting less. So actually, if you take it from the 2007, when we all had this mass, point number one as to why people are not noticing inflation, if we just cover these points here, and I'll draw with the fat cokey on it over here, is that we were all super rich round about then. Let's do favorite color instead. It will show up better. Doesn't want to work. One second, guys, sorry. Apps always fail when you live stream. Let's get it up. So one thing that's happened in the great 2007-2008 is that we had huge property upside valuation into the crash. When that happened, what that meant was everyone was flush and very rich at that point in time. The gremlins are truly out at the moment. So what happened is everyone was super flush and rich. Why? Because we were releasing equity, buying new houses. It was 2007, 2008, and we were really, really wealthy. And what ended up happening is, in that key point that I was highlighting there, is that when it crashed, they created a whole bunch of inflationary policies that pushed and created more money out there. But what was actually happening is a lot of people lost a lot of wealth. So you didn't get the same amount of expenditure despite their policies of pushing up and fluffing up the market and creating a lot of heat in the economy. You were getting a simultaneous, it's kind of like global dimming while you're having global warming. The climate's getting hotter and hotter, and Mr. Bill Gates is spraying carbons in the air or other pollutants to deflect away light. So actually you actually can cool a little bit, or you can not change, because overall you're getting a hotter planet, say for example, but you're getting more reflection away, and it counteracts the fact that the sun might be in a warm cycle. So in that effect, we didn't notice inflation immediately after, because there was in fact full deflation, because for the average man in the street, you were less off. Well, and for the experience of the 99%, we were all largely less off. So in actual fact, you felt deflation. You had less money, you had less disposable income, you lost a lot of wealth, etc., etc. That did not affect the 1%, and a lot of that money then went to the 1%. So we had a two-speed system. We had the small world that was getting super cheap money to buy and was buying the bottom of the stock market at 2009, which has subsequently had a better part of an 11, 12-year run into 2021, doing an absolute obscene amount, where individual megacorps, usually parastatally sponsored or very close to government, what I'd call the dark state megacorps, have done unbelievably well. And they've secured monopolies in all their spheres, or oligopolies at the bare minimum. So that's kind of why you didn't notice inflation post 2007 and 8. There's also, it's also a globally synchronized phenomenon. That's what I'm saying over here. So because it's a globally synchronized phenomenon, normally if Zimbabwe, when it was losing a value of its currency, it was losing its value relative to the dollar. In other words, it was an isolated case. Venezuela, kind of an isolated case. It was just blowing up relative to the others. What's actually happening now is that we actually have a global, first world, macro currency destruction, but they're all doing a little bit of it. So you're all like parachutists jumping out of a building, or even better, an aeroplane that's maintaining its altitude. That aeroplane could be gold or silver, and you're all falling. But when you look at each other, relatively speaking, you're the French jumper, you're the American jumper, you've got the euro, you've got this, you've got the Japanese yen, you've got the British pound. Largely, you're all falling, and you're maintaining relative valuation to each other. So because we're all lepers in the leper colony, it's hard to know that you're sick because we all look alike. That's just how humans are. They have bits of their anatomy falling off. And that's your perception because you know no better and you have nothing else. So by not being relatively measured, we've also not noticed inflation for that reason. All the same policies in this global communism that is coming to us, this totalitarianism, are being pursued. There is no independent nation-state policy. In actual fact, central bankers are in cahoots, a cartel and a cabal, and they're pursuing similar policies, regardless what language they speak and what part of the globe they are in. In fact, they're even cooperating together. When one has done too much damage to its currency and needs to back off, the others will do likewise and give this one a period. We may be coming for that on the dollar, and we'll look at the dollar index chart in a second. So we're going to look at a lot of interesting charts right now. We'll look at the dollar index and how it's been breaking out. The other thing that catches most people is that in my newsletter I was highlighting is inflation first shows in the asset prices. It shows up in asset prices. That's why it doesn't first show up in your liter of milk and your loaf of bread, because the people getting the money are the people that invest in assets, the multi-billionaires. Now, I'm sure many of you will have realized that the stock market has got to unbelievable highs. You've got P's going well beyond. Apple went from 800 billion to a 2.1 trillion company, mainly on multiple extension. It wasn't like they were selling 3 times more phones, just on multiple extension in a simplistic sense. There were various changes in marginal revenues, but they haven't become significantly better. Companies like Coca-Cola have about 4 or 5 times more debt and less earnings than they had 10 years ago and are worth more. That is multiple extension. It is too much money chasing too many megacorp assets for being parked up. So that's one of the things. So we're going to go through a couple of stages of what's coming for in my worldview. The second stage of inflation after the asset price is going to be the commodities. And we're already having that happen. In fact, I think we're about to have it reined a bit back because a lot of those commodities are all in the dollar. We're about to get the oil breaking out of the macro falling wedge. We'll be looking at that chart as well. So what's going to happen is it's going to pull back a little bit from the abyss on a bit of dollar strength. And we're going to, because the dollar is the pricing component for all these commodities, and they've all already now starting to get noticed. Soybean oil, Robusta coffee, we can show you, agris. They aren't all having droughts. They aren't all having supply and demand specific to their industry events. What you're getting is a currency effect. All of them have been going up. So they're going to pull back and pause for a little bit potentially. Why? Because it can't get out. Powell's speaking today, and he's going to be pretending that there's no such issue with inflation. So what are they going to do? How are they going to make Powell not look a fool? They will firm the dollar. So the dollar will now have a period where it will firm up. The commodities will find it harder to make headway. So I'm afraid will Bitcoin. It'll have more of a headwind than the tailwind it had previously. So will gold and silver, almost certainly, and they'll continue into an extended headwind in dollar terms. What will then happen? The other currencies will start uglying up and proliferating. So you've had a little bit of an acceleration in your diver that is American that's jumped out of the plane. He's kind of got a bit heavy and accelerated. What he'll start to do is spread his arms and slow down a bit his speed, and the others will tip vertically and catch up a little bit with him. So you could get the Chinese yuan is one that has come back a lot and got a lot stronger. You could get the Asian currencies. The Japanese yen is working its way up. The USD JPY is getting weaker now. We could actually have a pattern to go upside on the USD JPY. So we could start getting the period that Brent Johnson was maybe just early on talking about, not entirely wrong about talking about, coming right now. So that's how they will curtail the coffee, the copper, the wheat, the oil, the natural gas, the uranium, the lumber, all these markets and all the insanity that they've been doing, whilst we only do 1.4% inflation. The third inflationary stage is going to be the precious metals going up in spite of a dollar going up. So if they keep the strength in the dollar and the dollar starts to move, what will happen is eventually you get a point where the precious metals move even on and that will then be for Bitcoin too. That will be a real clear melt up hyperinflationary moment when the key anti-fiats, like the ones we've mentioned, including land and property as well in time, but they won't be first, they're not as liquid, they will be subject to deflationary pressure. A lot of them have banks involved with debt, so it's harder, you'd need to be a cash buyer, so they'll be slower out the gates, but eventually you'll have them confirming too. Just on that note, on your precious metals, the platinum group, platinum has turned recently. Palladium was running extremely. It's gone up 15 times since 2009. That's kind of like crypto-esque in a year or two. It's taken a little bit longer since 2009, but that's huge. Rhodium, 60 times since 2016. That is a crypto return. Rhodium. Now, these are small. They're not even futures contracts on some of these things, but they are deeply, deeply needed. Even platinum is now up, and it was the laggard of the precious metals. So the two monetized metals, silver and gold, are the ones that I think are getting the most manipulation. My reset sniper says the bullion banks sit on the bulk of gold. They can control the price. As long as they own it, they don't care if it's low valued. They're not going to be selling it or giving it up. They can put a low value on it to squeeze everyone else who's wanting to buy it as an investment and say, no, this isn't any good. Look how low it is. It's not moving. You should be in Bitcoin. You should be in, and all the memes that are taking on Peter Schiff. Think a little bit more about that. Think a little bit more about what they want you to do. They want you in the cryptos. They want you in. Don't be completely mesmerized by it. Yes, you should have a position in it. It's going up. But don't be solely mesmerized by it. So we'll get into that. What else comes in stages before we go on to the thread? The fourth inflationary stage is going to be a lengthy period of central bank neglect for the across the broad spectrum price increases. That's already started. A lot of these phases overlap. That's already started in the same way the commodity. So Powell is like, there's no issue with inflation. There's no issue. We need to be ready to stimulate the recovery. You know, they're going to look like, oh, shucks, we were just a bit late. You know, how were we to know? The thing is, the inflation started when they started QE, but it all went into the assets. It never went away, and they kept adding. And slowly you move from asset inflation into everyday goods and items. They can't stop it, even if they were doing high interest rate hikes. Now, by the way, that would kill the debt. So what happened if they started to up interest rates? If they thought, we'll pivot, we'll up the interest rates, what's going to happen? Well, straight away, all the nations like South Africa, Turkey, and emerging nations, Brazil, India, all of them will start having complete failures in their currencies. They won't be able to pay their debts in America because it's dollar-denominated debt. The interest rate payments will be higher because of the higher interest rates. Their currencies will fall. That means they'll need even more of the currency just to have the same amount that they used to pay, and now they have to pay an additional amount on the increase in interest rates. Complete failure, pitchforks out, etc. for the local people when they start, and it will turn into an IMF. And I think that will come, and that phase has to play. But they're going to try walk the plank. We are essentially walking a plank that starts out this wide and gets narrower and narrower and narrower and narrower until eventually you come to the point. And on the one side, you are facing the dollar being weak, and what we've had, and commodity prices going up, and gold going up, Bitcoin going up. We've just had an extended period of that since COVID. And now we're going to face, I think, for a while, the other side, dollar being strong again. And what that means is failure, weakness in the emerging markets economies, both on their currency and in the individual markets, debt-related issues, IMF, and all of that. And eventually you get to that point where you can't avoid either. So that's kind of what's happening. Unfortunately, parabolas come in phase 6. You'll get the IMFs in phase 5 and bailouts and all of that. You'll get price parabolas. You're going to get shortfalls. You're going to have governments and social services. You're going to have a begging class, people you never thought would ever be in that situation. It's not going to be particularly good. It's going to be problem, reaction, solution, of course. And you've got to make sure you're not part of those masses, because even government employees won't be earning enough, really, for the cost of living. There'll be black markets and there'll be shortfalls. Ideal to be close to people that provide, and farmers, local farmers, and be out of the urban areas, in my worldview. riots, crime, that's going to be really, really high. That doesn't mean crime and riots can't go rural or at least suburban, but there'll be less thereof, and there'll be more scope for you to have community spirit and get close to your local farmers. Martial law, new financial system birthed with the central bank block tokens. UBI gets rolled out, government saving you, making you dependent and paying you out. Pensions admittedly destroyed. Why? The biggest bubble is debt, guys, and they're all in the debt. The pensions are in the debt. So they will write off the debt, which is also writing off the assets that belongs to the pension system and many other investment vehicles that have it. So those are how I see us going into our reset, and there's some of the detail. If you want more, jump onto the newsletter on that, and we can have a look at it when you can have a look at it in your own time if you're on our mini series, by the way. Worth getting. You don't have it to any money, get a little bit of an idea of what we're doing. By the way, something else, non-farm payroll. Tomorrow, you will get an hour and a half of technical analysis on the traditional markets. We'll deal with some of these things here and a lot more, and also the crypto fines as well. So doing a live stream for you today, but you're going to get more of the detail here. But one of the charts you'll certainly see, and we'll have an update look at, is the dollar index. So we're going to look at the debt markets and the dollar market. Dollar index mainly benchmarked against European currencies, a little bit of the yen in there, the Swiss franc, the pound, and the euro. So on the bigger time frame, to remind you all, this was a falling wedge. Let's do it on 2 days. That was your falling wedge, that blue line, the previous low. And it looks like we're coming down, down, down. We've had 3 impulses in here. And then we've popped out. We had a smaller wedge in there, and we've just popped out of this situation. Now, let's be clear. Most falling wedges will have a bump to the upside. This one has done that. And then that points to a recovery. However, there is a third option that could see you just roll over and fall further. So this doesn't mean an absolute bottom call on the dollar. If we get too much fear very quickly coming out of the likes of Turkey, South Africa and their currencies, and they're not yet ready to pull the whole tent down, and the IMF and the bailouts for all of these host of emerging nations that will suddenly be in huge trouble if the dollar starts going up. And by the way, you might say, well, the dollar was up there and they never went bust. Remember, throughout this period, all those emerging nations have added COVID-19 debt all the way down. So the sensitivity to interest rates, the sensitivity to the dollar only gets higher and higher the more debt you have. In other words, if you've doubled your debt, by the time you get halfway up here, you're as bust as you would have been up top there had it stayed there. If you've quadrupled your debt, you're way more sensitive to change in the strength of the dollar. So let's take a look in that smaller time frame. How are you guys doing? By the way, we will be watching your comments. Let's check what the guys are saying. Pablo Pina, I guess no protests. No protests in martial law. So protest has to be peaceful, not to label all protests bad. I don't label all protests bad at all. I wish there was far more protests. We need way more pushback. But the problem is the pushback's coming in the wrong place and is controlled by the wrong people. This is controlled opposition. The pushback needs to come at the central banking cartel and the people that put them there. These are the criminals that created this situation, and these are the criminals running the game, and these are also the people that are behind your pandemic that is killing small and medium-sized enterprise, removing the middle and giving and graduating all business, all purchasing to the oligarchical megacorps such as Amazon, etc. So unfortunately, everyone being BLM, a Marxist-funded organization, not helpful. Anybody out there policing other people for not wearing a mask, not helpful. We need to get to the criminals, not the innocent. But unfortunately, we're too divided and conquered by gender, by race, by sexual orientation, LGBTQN+, whatever. That is how they're keeping you so mesmerized with subsex fighting other subsex that the crabs are too involved, pulling each other in the bucket to actually deal with the prison warden that put all the crabs in the bucket. We should be working together to get out the bucket, not pulling each other back in, but We're too smartly divided and there's too many fools. That's the problem. So this break over here was the beginning of that falling wedge break. That was the next. Typically when you break a wedge, you get a return move, which you did. And now we are going back up. This could form a little continuation pattern and we could see further dollar upside. Dollar upside is not going to be welcome for the tech stocks. Interest rates upside will come to the bond soon. Not going to be welcome for high growth tech stocks. The low interest rate environment was real jet fuel for them. Let's take a look at that bond market. So that's the dollar. Possibility for dollar showing real strength here. And it held its place in the upper floors as well over here. Let me just draw that. There was your splitter half. It held its place for a sustained period in there before breaking upside. There's some real strength in here. By the way, the borrowing on 10 years to short debt is going crazy by the same bankers that are downstream of the central bankers are actually shorting the debt that is being issued. Remember, the Fed is going to have to be the biggest buyer of that. China doesn't want any more of America's debt. So let's have a look at the TLT. So we called this a top some time ago. Let's go to the daily and discuss the slap in the face that occurred here. This was the high point for the bond market in our opinion. That was the biggest crisis ever to hit this planet. Don't forget, everyone thinks 2008 was big. They shut all businesses down because of a flu. Because of a bad flu virus, they shut all businesses down. They stopped people from going to work. They furloughed people. They said restaurants can't open. They said bars can't open. This is bigger. We did a YouTube in 2017 saying there is a bigger event coming post, because that was already post subprime and all of that, where you will be caught. How is your business set up? I have an online business that I can run anywhere in the world. How is your business set up for when they come and close out the big middle for small and medium businesses? In that YouTube, I said it's coming. How are you set in 2017? You can see it. Go check the Twitter. Said be careful. It's coming and they're going to hollow you out. It's going to be a black swan event. I'm predicting another unpredictable black swan event that's going to cull middle markets. It is a polarizing period for wealth. There will be an extreme. And what have we had since? We hear words of K recoveries. The top percent go up and everyone else go down. That is by design, my friends. You think it's by accident? It's by design. UBI and furloughs are not to compensate you for loss of business. They're to keep you docile. They're to keep you docile and from reaching for your pitchfork. That is who it is. You are divided and conquered. You are arguing with BLM versus White Lives Matter versus transgender versus lesbian, gay or straight versus hetero versus woman versus men versus everything. You are fooled, divided and conquered. And this market is busy quietly turning. This is the bubble. You want the bubble? The bubble is debt and money creation. Every dollar is borrowed into existence. Debt is the problem. And this is the top. And who's the last remaining buyer of debt? The Feds self-buying their own curve of money. That is your problem. So this top, we've called for a fall. It will fall further. It will fall further. We expect this to be run. And further to that, I expect this to be proved a secular top of 40 years in the making, a secular top of 40 years in the making in the debt markets. If you could borrow up to some obscene amount, I don't unfortunately have, I'll look for the other debt charts, which will show you 40 years. The TLT doesn't have that time period. You can see how far and how long we have been in the cycle of appreciation for bonds. And that this could indeed turn out to be, let's get that pink pen again. This could indeed turn out to be, one more time, let's try get the pen again. That's what I'm showing you off the screen, off the lows. A real big first inverted HVF, which has a high ascending structure with a convexity in it. It is absolutely typical of a final top turning point with a major slap in the face, which was single biggest economic event because they've gone out and justified flattening the economy. So let's have a look at Raoul's series on debasement and some of the interesting charts he's showing. While I do that, let's have a look at some of your comments. So Nathan says debt will last for 100 or more years. Well, if they refuse and don't jubilee out some of this debt, which will be the jubileeing out this debt, which would be essentially calling quits and writing it off, would essentially be the end of the pension system. And I think they do wish to kill the pension system and roll us into a UBI where everyone, regardless of age, gets some form of payment dependent on who you are, your social score, and many other things. A happiness index. You will own nothing but be happy. Funny that all these themes, all these little confessions are seeping out, my good friends. Let's just remind you, soybean oil, that's how it's trading today. That's your daily soybean oil chart. That's a falling wedge break. Let's show you it on a bigger time frame if you like. Let's go weekly. See that broken wedge? Pull back, go, go, go. And peddling right now, happening right now. Massive falling wedge, multi-year falling wedge. Let's get that, let's get a monthly for you on that. When did it start? When was the blow-off high? The blow-off high was 2007-8. Remember that inflation? Look at that mover. Commodity brokers haven't had this much excitement and fun in absolute years. Look at this. This is a runaway bull. Runaway bull. If you think it's going to stop just because it gets there or there, this will exceed these high points in time. Massive 3 impulse wedge, beautiful break. Are you long soybean oils? You probably haven't looked at a soybean chart before in your life, and that's okay, I understand. But maybe you should start. What about looking at corn futures? It's getting there too. Also, breakout. This is on a monthly chart. Was at 300, now at 539. Now, this is one of the least spectacular. Corn. This is your inflation, peoples. Wheat futures, barely getting started. One of the lowest. But start it will. 1, 2, 3, and breaking. Still to come. You saw what soybeans did. You saw what oil's done. You've seen what coffee's done. Robusta coffee is coming. This is a trade for us in our community. Having a pullback today, breakout as well. What about the 10-year notes? So let's see if I can get a full monthly chart here for you. Some of it. This is the top that we're calling. I'd drawn those pink lines a while ago. This is the rounded top. Man peas off the roof. Down, down, down. This is very, very steep. Rising wedge break. Over, 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 over. And trading down today. That's a weekly chart. You've been down, net down, for a sustained number of weeks and days. Just look at that. The last high point was up top here in August of last year. Since then, you've been bleeding out and accelerating to the downside. So let's show you this one. This is a full 40-year cycle. And this is the reason why, and this will encapsulate the entire debt market period. This is 10-year Treasury note yield. The yield is the interest rate. So the interest rate is inverse to the value. So that was when yields were super high. You were close to 16 on the 10-year, 16% paid. Since then, Greenspan, him of the 1987, coming in 1987, Faulkner killed inflation, was the last semi-serious Fed, killed it, and rates could start coming down. Greenspan came in, everything was a lowering job. Look at that staircasing. Everything was a lowering job. Everything. Absolute low. I'm calling that 2nd of March 2020 the bottom for yields. I don't think you're going to see on these treasuries negative yields or anything. 1st September 81. 40 years ago. 40 years ago. A cyclical bull market in bonds that's going to go down as one of the longest ever. By the way, those of you that don't see this, let me just put this in log scale so that you can see how big the relative change in rates have been. Because if you go from 0.25 to 1.25, you have in fact gone up 5 times. When you rescale in percentage terms, this is why everybody is saying, wow, what a reflation in rates. That's it right there. You can see that the most extreme period of rate moves came from when you're at 3% there, you traded to a low there, and you're now snapping back. This is the volatility. This is the business end. Let's take that scribbles off and give you a little bigger view of the last few years in interest rates. That is absolutely huge. That is absolutely huge in percentage terms. Over 3% here, absolute low 0.4, whiplashing back to 1.5. That is your interest rate volatility. That is typical of a top, a final capitulation low on yields, and that is it. It's a blowout, and then you come around back. So people, if bonds are going to start becoming worth less, what's that going to do? If rates are going to go up, what's that going to do? It's going to hurt your big tech stocks. It's going to hurt gold and silver. It's actually going to hurt quite a few things. So what do? Let's go into the Raoul thread and talk about what he was talking about in terms of debasement and change tack a little bit. As I say, worth following Raoul. Interesting series of charts that he did there. I'm doing a lot of thinking, he says, about currency debasement. Yes, me too, and how to measure it. You see, I think everyone looking for it to appear in CPI inflation is likely to be frustrated due to the lack of wage inflation. That's you. The wage earner is the worst hit by this. If you are getting a fixed salary, you are being put on the treadmill to the poorhouse. Everything is going up around you. You're getting flat, no increases. Just be grateful for your job, maybe 1-2%. They are absolutely killing you. How many of you here in the comments are working for a wage, a salary? Tell me, how many of you are not yet in your own businesses doing something super high value that could see you work from anywhere in the world? Come on, you can do it. Let's have a look and see. What do you guys say? Yeah, so wage inflation, not good. You know, the 99% are not getting additional money. They're getting 2 earners, barely cutting it, paying a mortgage and a car and groceries. Holidays, all of this, these lockdowns, reductions in wages, 3 jobs to replace 1, getting gig economy, all of this. Terrible for you. Demographics, technology, and globalization. Demographics being in the white European, the Japanese, being such that the age is getting older. Okay, so we know there's asset price inflation, so we agree on that, indeed. Let's stay with a pink pen. This is, since 2008 and the beginning of QE, a 263% move in the MSCI World Equity Index. That's not the NASDAQ. That's not the best. That's not Facebook and the rest. That's done way more. This is world equities going up. And you can include the FTSE in that. That's largely been flat all this time. So it's quite a strong move, as you can appreciate. Okay, good. But when we look at the denominator, Raoul's talking about the G4 central bank balance sheets. We can see the equities are traded sideways. So actually, general equities have not been that, they are not that expensive given how much money has been created. So if you divide by the total amount of central bank balance money out there, equities are not excessively expensive when compared with 2009. Don't forget, this will be all equities. It won't be just the tech stocks. This is an overall equity feeling. So it's the world index of equities. American might be higher, tech stocks higher still. Certainly Tesla and the like. So what is this? How do we understand what the debasement? What's holding value? What's expensive? And what's cheap, and where should we be hiding? The S&P shows similar versus the Fed balance sheet. So if you just come onto the general Standard & Poor's 500, which isn't the sexy industries only, it'll have the Coca-Cola and the IBMs in there. It's also not exceptionally expensive in terms since the 2008 compared to where it was before into the great subprime crisis. This is still a depression. So those equities are actually not overvalued given how much money has been created. So, okay, we keep moving on. Where is the overvalued? How do you measure the actual drop in the value of global currencies, Raoul asks. Okay, well, the Dixie has essentially traded sideways with a slight uptrend, he's saying. So we have our similar type view. You had a first, this was a turnaround. This was a bear market into there. You had an up move, but now you've been in a down cycle. You've had an up cycle, a down cycle. But in essence, he's saying you've kind of been going up. That band is actually not correct because before that, you came from above. So it's only recently that the dollar has had that slight upward gradient, but recently goes back to 2009. And that's 12 years ago. So it's fair enough to say that. So it's not a dollar story, he's saying, because the dollar has largely, against other currencies, which includes the pound, the Swiss franc, the Japanese yen, held its own. So it's not the dollar's been weak, that's why we're having this inflation. So when he looks at all 27 currencies versus the dollar, equally weighted, they have underperformed in the dollar bull market, but only by a bit. So if you look at 2000, you're there, and now you're there. Again, a mixed bag of a story. So the rest of the world's currencies have lagged the dollar somewhat, but they've debased a little bit more than the dollar. But even still, that's part of how the inflation gets hit. They're all lepers in the leopard colony. And that's one of the observations that I make out of that. If we just load this image here, we look at gold versus a basket of currencies. Now, gold is supposed to be our big preserver of values. And it has to a degree, but not enough. And you'll see that from this story. If you look at against the 27 currencies, stripping out the gold in dollar terms, so gold in Australian dollar, Canadian dollar, you name it, they're all in there, the pound. It shows that those currencies have all generally declined 60% in gold terms versus the store value. That is debasement, and gold has preserved a certain amount of your wealth by going up. But when you look at how much currencies have been created by the same 27 countries, the debasement has been far higher than 60%. So if we look at that same basket of currencies versus the balance sheet, they have shown a larger decline on a balance sheet level. So they've destroyed value even more than gold has appreciated against them. So gold's only given you partial protection to that. So that's the point Raoul is making there. So here's the G4 balance sheets applicable in shorthand, how it's fallen. Minus 60% gold has fallen. So it's only given partial value. It's still lost some value against it. Now, as I've said, the bullion banks, to me, and the reason for that for me is they sit on all the wealth. They can mark to market to true value at any point. And I think that may happen. The point of the matter is they don't want gold, the canary in the central bank mine, proving that the central bank cartel system is over until the last moment. So I think it's a trade. Holding precious metals, silver and gold, is a bad trade until it's suddenly very right. And that's the leap of faith you take. They don't want to let you. It's the last shoe to drop, and they control it. And they also control silver as a result. The other precious metals around it all going up. Platinum going up, rhodium up, all of these. Copper going up as an industrial metal, all going up. Why wouldn't the effect be in the precious metals? They don't want it to be. That's why. Even real estate, which is another traditional store of value, has also failed to offset. So we're seeing this reduced wealth effect, that even real estate has held some of the value, but not enough when you compare it to the proliferation in the balance sheets. So where is all that money gone, and how is it done? Well, it's the asset price inflation, and one of the big stars even resets. Bitcoin divided by the G4 balance sheet is still massively up. So Bitcoin is one that has outperformed and is preserving you. You would hope so, with the amount of growth that it's done over that time. Wealth is also being preserved by tech stocks, but I think that is going to slow if the interest rate starts getting higher. So this secular super cycle of technology, they've outperformed the Fed balance sheet by 220%. So that is up, but it's had its volatility, and it's facing a headwind right now, which is those interest rates. By the way, those same interest rates will also cause a headwind for Bitcoin because it will firm the dollar. So Bitcoin has been going up on a weakening dollar. Now it might face a strengthening dollar to go up into. You can't expect it to go up at the same rate. Also, bigger market cap, more money required. There is a huge amount of money that still has to come in, but it may be more measured in the manner in which it comes for a while. So he's saying the technology age, it makes pure sense that technology stocks and Bitcoin have actually beaten balance sheet debasement. That's one of two areas that have actually survived and beaten it. Gold has partially beaten it, but still slipped. So you would have gone down in true buying power, but to a lesser degree. So what does it all mean? We're looking at the wrong denominator of assets, as I've suggested. Broad-based equities and real estate have trodden water, even lost ground. So that is the Fed balance sheet against, let's undo that. That's the Fed balance sheet against the S&P. Come on back. Sorry for that, guys. Let's get that chart back again. So that's the balance sheet against the S&P, which is roughly held a value for general stocks. Tech stocks have outperformed. So that's one area. That makes total sense. Where did we get before we were rudely interrupted? Yeah. So what does this all leave us to conclude? Well, Bitcoin is a trade. Bitcoin should be a trade, and it should remain still a trade, but it might be leggy. It might be leggy, and we may have a pullback. So we go back to the charts. Debt is a big short. You should get out of your pensions if you have them. Any way that you can get control over that money, debt is going to lose immense amount of value. If it doesn't go to zero, it's going to lose an immense amount of value. Whatever rates it does pay are actually well behind inflation. Shadow Stats has us at 9.9% at the moment on a US benchmark for as per the 1982 ratings. Good. So what have we learned from this? I think silver will be accurate and on the money, but later. I think you should accumulate it in the discount window. I think the same applies to a degree for gold. This diversifies you away from and will protect some of your value, although not as much for now, until such time as it suddenly becomes very, very right. It's very unlikely that copper and all these other aspects of commodities are going to continue to do what they have done and to continue to overperform in the way they have done, in a manner that is highlighting inflation, and then the silver market will not, and that gold as real money will not. Of course you will have digital currency. Of course they're going to want to transition us and not have to deal with the gold silver thing. That is why I think it's been helped to be held back, and you'll say get the masses to chase the one we want them to go in, which means you've got to make it appeal, and that is crypto. I think you need to do exactly a little bit opposite to what they are making look most attractive. In the long run, I think it'll serve you very, very well, which is why I've said have a stable of horses, not a single horse in this race. Which brings me back to, again, silver, gold, crypto, Bitcoin and others, and also at some point, land and physical assets. So a farm, if you like a bit of space, something that could produce agricultural outputs, you're going to have to see yourself through possible supply shortages and everything else that's coming in reset. What do you guys think? Where's your assets going to be? Let's have a little look at the comments and have a chat with the questions. And I'm going to take a peek at the screen here. Pop your comments in here. By the way, we really appreciate the likes. 747 of you watching, and we've got 240 likes already. That's awesome. We appreciate that. That means getting out some free value stuff to you guys without adverts is appreciated. Let's have a look at the comments. Better than staying in stocks, says James. I'm not sure what's better. I think he's talking about somebody suggesting tulips. ADA has no working product, says somebody. He doesn't like ADA. He thinks it's too early. BMA says, I like Francis's videos. Thank you. We like to have people who like our videos. And Eve said to Adam, here is the apple. When you feel the real split, hook out the base. Yeah, not sure what that's about. Land, I agree, but with gold is trash. So some guys don't like gold. Well, the key thing is the control structure holds a massive amount of it. And they can set it at whatever price they want, and probably will post reset. And they'll probably make it illegal to own in between then. So you're going to have to be bold. You're going to have to be a renegade. You're going to have to be smart. But I think it will get re-rated because of its scarcity, its unique properties. I think the same for silver, only plus because of the industrial demand. So personally for me, I think those are worth having. I think land, very much so. I think they want to get the goyim off the land. You need to make sure you buy right with strong title, without debt, without any other claims on your property. Maybe you want to keep it in a corporation. Maybe you want to keep it in a trust or a foundation so that you as an individual can't be wangled out of it. I sometimes feel you need the legal entity protections that they themselves use rather than just being an individual. Think about corporate structure when you do these things. We're helping our guys on getting set up with regards to likely tax increases, hyperinflation, guys. If the dollar is going to go up a little bit and we're going to have panic in the other markets for a while, that will calm the commodities. But if it is to soften again, once we start to see the distress in the other currencies, what's going to happen is the commodities are going to continue to run. Too much money being issued, too much to chase. A lot of money needs to get out of debt now, which is now looking like the end of that 40-year bull market. If you want to get out of the debt markets, where are you going? The debt markets are huge. So that could support stocks, but it'll support more of the bricks and mortar stocks, not so much of the highly leveraged growth tech stocks. So you might see a little bit of a rotation inside equities in terms of what you want to do. Crypto Zendo Hex has outperformed BTC by 20x. Yeah, I've been in it for a while. It's kind of flat since I've been in October, but it has had a great run before that. So we'll see if it gets set up again. Lots of great information. I'm just too much of an idiot to understand it. You're not. Watch it again. Listen to the key categories. I don't think they've changed. It's the usual suspects. But productive land will be certainly good. By the way, the non-farm tomorrow, we'll look for technical trades. We found a couple of oil trades. We're looking at a couple of other places where we're expecting equities to move strongly in light of the increase in interest rates and some of the commodities. And we found some setups. Come and join us and assess those tomorrow. Book a call if you want to join the community and be in the full community. There's a link for that. It takes you to the website. Don't engage from any other place apart from a link that takes you to our website. Otherwise, you're probably being scammed. People are taking pictures of people's faces, and they're doing it to me too. What about XRP? Yeah, we need to see if it ever will show real performance relative to the other cryptos. It's an underperformer as a crypto. Nick McGrath, rhodium was super high, very, very high. Yep, went up. Etienne Gomez, I got wrecked in gold trade. So gold made its HVF target and is in a long period of progress decay. It had dollar weakness as a tailwind when it was running. Now it's facing a bit of a headwind as well. So it might extend its progress decay for a while, but it's still the right thing. It's not growing on trees. It is limited in number. It's not being found at record rates. It can't be over proliferate. Francis, could you please share some thoughts on USD Ruble? So the FX currencies will become very interesting, particularly those against emerging. There's always been pressure on the ruble in terms of the control structures of the world. The ruble is bad because the ruble wants to de-dollarize along with China and continually seems to be getting beaten up by sanctions on America. We will and possibly revisit things like the USD Korean won trade again if it starts to turn. So we got the killing of the dollar that just when it was looking like it was going to get away, got put on ice and killed. It's still there and it goes right off that screen. That one could come back into season again. The USD ruble, a little bit like it needs to rest. Remember, the Russians don't have debt anymore like they used to. So they're in a better state. They're in a better state, and I expect this broadening structure here to possibly break to the downside. So it's not exactly the same. The rand, the lira, the real, and the Indian rupee, different kettles of fish. This has got a lot of energy in it now, and the oil price is up. A lot of gold and low debt as a nation state. So it's not a crisis. It's not as badly set, Russia, for a commodity bull cycle. Commodity nation, commodity bull cycle. This will help also the Canadian dollar and also the Australian dollar a little bit, particularly the Canadian with the oil side. The energies is kind of hotter, but copper being what it is and recently will also help Aussie a little bit. Mexican peso kind of bottomed out there, the US currency, after a long pullback, major spike, made our target from this structure here, and then the down leg, and it's been in a downward all the time, rounded bottom and stirring, also bouncing off a funnel level there. So again, another instance of dollar showing strength against an emerging nation. So that's a little bit about the dollar and some of the emergings. We took a look at the ruble. The ruble's a little bit more of an exception. I would expect the euro USD to continue to come off a little bit, rising wedge. Remember this. So that was tactical retreat, weakness of the euro. They didn't want the euro to lose too much ground too fast. So it was kind of keeping it up, but letting it come down in a measured way. And since then, they've had this rising wedge creation. That was a previous high level. Looks like we're not necessarily going to get there. Bit of a rising wedge. You could quite easily break down out of that. So a bit of weakness for the euro, possibly against the dollar. So what could happen? Well, if the dollar is going to it's going to do its stimmy and the 1.9 and all of that, but then thereafter they need it to be a bit strong, you might find Americans are going to wait quite a while before they get another stimulus check. You start to get reliance. They're going to make problem, reaction, solution. They're going to get you hooked on it like heroin, and then they've got you begging for your next freebie, rely on government for money. And what will happen is Europe and the East will start to weaken. We've seen the yen showing a loss of value. In fact, I'm prepared to contemplate that this is not even a downside break, that we've got the wrong direction. When we're wrong, we're absolutely damn wrong. We've been modeling for a downside break. And in actual fact, this could be upside break. So if I just take some of the scribbles off, we could end up in a very good setup for further upside here. Look at that rounded ease down in a very controlled way. You could argue there was almost a wedge in there. And now look at that strength on against the yen. Nikkei will do well on devaluation of the yen. Lots of good quality companies haven't had the same bubble as America. Its last bubble was in the 80s. It's never taken those highs again. Maybe the day for the Nikkei to take previous bubble highs from way back in the 80s is coming. We're in the 2020s. That could be what happens. Big possible move. Big chunky second impulse, table mountain top. Big first impulse, and we're going up for a third and roll over a little bit, and then we could go. So it could be a very interesting trade. Eastern currencies could be weak. We're talking about the Korean won again. We're talking about the Japanese yen. By the way, the Chinese yuan has been very strong during this period. Maybe it'll be time for them to weaken up a little bit so that the dollar can be strong, so that they hide the cost of commodities. But guess what? Every other nation apart from America is going to be getting inflation, especially if they're losing ground to the dollar. If the dollar has to go up to stop the oil from getting too high, and this is Powell and the banking cartel's new game, what actually ends up is only the Americans don't get any fresh bouts of inflation, but then they stop selling goods. iPhones become too expensive, things, their trade deficit gets worse and worse and worse. But they import cheaper for Walmart from China. So their inflation stays flat, everyone else's goes up because everything priced in dollars goes up. Coffee, all of these things goes up. So everyone's getting a chance to get a little bit of inflation, but everyone is getting it. You can't stop the inflation. It's already started. It started when they did the first session of QE. They've done ever bigger amounts. The money doesn't go away. It gets transferred. It gets transferred initially into assets, and then it flows from one assets into other, and eventually you get commodity moves as you keep adding to it, as you keep your debt proliferation. Only way they can inflation for a while is to have another panic, fear, COVID type moment, another black swan, create deflation, everybody stops spending, everybody lives on less, everybody stays at home. But we're already just about there. There's not that much more downside. There's not, how many more beatings can the 99% take where they're spending less? Who's living large right now? Who's just bought an extra car and an extra property and just buying outfits and going absolutely mad? Well, the billionaire class, yes. The average 99%, probably not. Worrying how they're going to make rent check, worrying whether their stimmy check's going to arrive in time to make payments on their Netflix and their Amazon, all of those things. So that's where we're kind of at. Brazilian USD, not far away from a massive move also. Yep, so you'll see all these currencies. Go and look at them all. It's not my purpose to do in a full conclusive demo here. We will be having non-farm tomorrow. You can join me. We'll look at the Brazilian real, the Indian rupee, all these other amazing currencies. It's here just to tell you, in my worldview, the inflation is here and the bond market has topped. In my worldview. Could be wrong, always could. But we want to be early. We don't want to be late. Interest rates probably going to go up. And one of the best ways to get the goyim off the land is everyone with debt gets priced out and can't pay their mortgage and gets foreclosed on. The debt gets written off and you become a tenant in your own home. What a perfect play. In that way, you can do a foul sweep of everybody. If you're overextended, you've got a massive mortgage on your home. You want to think about that. Could you pay it if it went to 15%? What if it went in a real hurry that way? What if they just pulled too big a trick and said, hey, this is the currency markets, you've got to do it. Look at the terms and conditions of your mortgage. You could be flushed out. Ideally own your properties outright. That's advice from me. I know you can't all do it, but then you've got to think hard. You're vulnerable. You're going to be vulnerable. The scammers are out there. They want to turn you into tenants in your own home. Danny Rio, 50K BTC is cheap for a billionaire. ADA is dying. Yep, it's in a descending triangle. I think it will. Pump my hex back. I think it'll do all right. I think it's at a relative low 2 hex. So I think it will set up. But I haven't been in there for long. So it's not fair to just judge performance on, just November, beginning of November, end of October through to now. It's looking okay. It's mildly up, but it's not fabulously up. You look at it, even Ethereum that's underperformed the likes of ADA, BNB and DOT, which is something initially we didn't see. We saw the inverted head and shoulders and the move for Ethereum. It started to go. It ran 2,000. Then the gas price issue started to get too much airplay. And in spite of that, the Ethereum is slightly higher than if I'd kept my Hex in Ethereum. But the next leg up in Hex may change that. We'll see. We'll see how it goes. We keep an open mind. We'll see how it goes. What about mining stocks? So mining stocks in the short term, I'm expecting mining stocks to actually hold on a bit better than the underlying commodity. Generally, I'm expecting them because they've lagged a fair amount. They've lagged a fair amount, and I'm expecting them to hold on quite a bit. So I'm in First Majestic. I like it. I'm in it. I'm in the money, and I will buy calls, long-term calls, at any dip. So if we get a big scare moment and a big crap the bed moment, I'm in there. I'm buying silver, and I'm buying calls on miners. That's what I'll be doing. And I will also be buying Bitcoin dips as well as part of that. But I don't want to be exclusively Bitcoin. Let's see you for the rest of this thoughts and the rest of this feedback. Tomorrow on Non-Farm, it's really cheap as chips to come and join us for 3 hours. You get the recording as well. You can watch as many times as you like. It's hosted in a lovely portal for you to use for 30 days as well. So if you can't see it straight away or you can't attend live, you can grab the recording at any time. As I say, watch it as many times as you like. And you can interact and see our core ideas, some real trades, some setups, risk rewards, how far, tight and tight risk, expansive gains. That's what we're all about. That's what we want to do. Thank you for coming to attend. Thank you for the 740 of you currently on. We're looking to grow the channel. We appreciate shares. There's no ads on the channel, and we'll deal with all the issues we think that are relevant. We don't hold back on anything. That includes the agenda of the central bankers and their dark and devious intentions for us all. Yep, we'll go there. You can also sub the Reset Sniper if you want more of that. I'm looking to put something out there if it's soon coming, and of course the Crypto Sniper for very specific crypto trades. Okay, and we will be doing a crypto finds as part of the Non-Farm tomorrow. You'll see which alts I actually have half an eye on, and where I've already taken a upside trade for. Thank you very much, guys. See you later. All the best.